Hello, I'm Mi-Yoon from the Department of American Cuisine. Today is May 30th, and let's start the United States stock news. Today as well, I, Mi-Yoon, am here to deliver the honest voice of United States stock investors without any change. Mi-Yoon here. Many of you spent a busy weekend, and I want to say a word of encouragement to all of you. Recently on a broadcast, I, Mi-Yoon, introduced a new type of content that I planned with excitement for the Mi-Yoon family members. It's called the Mi-Yoon On Podcast. Yesterday, during the broadcast, I shared the very first episode of the podcast with many people. But there weren't as many feedback comments as I expected, so today I want to ask more of you to leave your feedback. The reason I developed this new content called Mi-Yoon Podcast is because of this. Currently, there are over 3,000 members in the Mi-Yoon community. Out of 3,143 members, many of you have joined the Mi-Yoon All-in-One membership. The problem is that there are so many pieces of content being uploaded every day. If you look at the number of clicks here, it's 500, 530, 1,700. This is just based on the Naver Analytics data, that's all. Overall, it doesn't really reach 1,000. So when I thought about it, the reason why people join paid memberships on YouTube is because they want to support creators who provide free programs, like me, and they want to help cover the costs that aren't covered by the free programs. That's why they join memberships like this. I want to make sure that all the content I provide is good, so I feel a sense of responsibility. But the problem is, I provided a lot of content through KakaoTalk, and most of this content was in text format. So reading long articles and then reading analysis articles one by one wasn't easy. So recently, I've only summarized the key points of each post in the easiest way possible and delivered them to you, but I wanted to do more than just that. So now, I either post important issues separately or write analysis articles for each individual topic. If I do it in the form of a one-on-one podcast conversation, it's much more fun and easier to understand. So from now on, I thought that if I provide a lot of articles in a podcast format or in a way where people can have conversations, many people could easily consume a lot of information. So I also shared one of my podcasts on the original Mi-Yoon broadcast for several people, and today I'll be doing it again. Please listen until the end. How much help will this podcast be for many people? If you leave feedback through the comments, I will personally reply to each member, and I think you will be able to receive a lot of help from many YouTube channels that I run. Now, let's get started right away with today's United States stock news for Tuesday, May 30th, the day after Memorial Day. Today as well, I have organized the key market trends for United States stocks. Let's take a look at the S&P 500 chart first. First of all, you can see that green is completely dominating over red. So, compared to yesterday, there were clearly more stocks that went up than those that went down. But still, if you look closely, you can see that only a few areas, like Nvidia, are clearly showing green, while most of the green is actually quite faint overall. So, overall, we can see directly that the upward trend wasn't that strong. Yesterday, I showed you the original chart of the rate of return on my broadcast. Nasdaq was showing a steady rise of more than 2%. Now, the atmosphere was so good, so why was there such a sudden drop? Maybe there wasn't any negative news, so this is something we could have predicted. So, let's take a look at the negative news that caused the upward trend to stop, and I'll summarize it for everyone. First of all, this was yesterday. The actual United States gross domestic product for the first quarter was announced yesterday. I mentioned several times in advance that there could be revisions, and the gross domestic product has been revised twice. So last month, the first announcement was already made, and this time is the second revision. Then there will be a final announcement next month. That's how it works. The gross domestic product growth rate for the first quarter is minus 0.2%. So once again, we're confirming that the United States economy had negative growth. And even though it was unexpected, last quarter's figure was minus 0.3. So this is actually a slight improvement compared to the previous quarter. So, does this mean the recession is over or not? It's hard to say just by looking at these numbers. There was one positive factor. If you look here, you can see consumer spending. This is the current state of consumer spending. But consumer spending originally was plus 1.8, so up until recently, it looked like consumer spending was strong. This figure was revised once more and has now dropped to 1.2. But personally, I don't interpret the recently announced gross domestic product figures as being that negative. I'll try to explain the reason for that in a way that's easy for non-majors to understand. If you look at the third line here, you'll see there's an emphasis. This is the import volume. And as you can see, the import amount increased by about 42.6% compared to last year. Last time, in the first export figures that were announced, the plus was 41.3%, but now it's even higher. The reason why imports increased by as much as 42.6% compared to last year is something we can easily guess. It's because we imported a lot of trim parts and accessories in advance. Now, let's see if we can give a proper interpretation of this, and I'll try to express my personal opinion as well. The surge in imports to avoid Trump's tariffs in the first 3 months is a temporary factor, and it has a huge impact on gross domestic product growth that cannot be ignored. We should be able to interpret this part easily. Well, it depends on the numbers in the above article. According to the figures for the first quarter, income grew at a very fast rate of 42.6% compared to last year. This is more than 5 percentage points higher than gross domestic product growth, and this is how the analysis is coming out right now. Well, if you look at it like this, if you simply recalculate the first quarter gross domestic product growth rate, excluding the temporary effect of such an unusual increase in income, this is what you get. The actual gross domestic product growth rate is not minus 0.2, but if you add 5 to this, it becomes plus 4.8. So this is how we can calculate the adjusted figure. Now let's move on to the next topic. Of course, this does not directly reflect the various economic activities that have different income structures. Therefore, since there were actually various effects, it wouldn't have increased by as much as 4 or 8 times. But still, isn't it true that this time the increase in income was unusual? We can directly identify the main reasons for the growth of quarterly gross domestic product minus. So, in the next part, the possibility of the United States economy showing minus growth is very low, and the possibility of a recession occurring is also unlikely. Next, since normalization is likely, the gross domestic product figures announced this time are not at a level we need to worry about, so we can conclude that there is no need for us to be overly concerned. And recently, there were 2 pieces of news that the upward trend in the unemployment rate was not found, but in reality, the reason the unemployment rate has been declining is due to the service sector. There was another piece of news related to the stock market. Yesterday, the International Court of Justice ruled that the transfer of assets is illegal. That's why it had an impact, because such a significant piece of news was announced. But not much time has passed, so it's the Court of International Trade. The effectiveness of Trump's pardon was temporarily restored, so this kind of news came back up again. So, on Thursday, the Court of Appeals temporarily invalidated President Trump's tariffs, and now it's the Court of International Trade. Here, the court temporarily suspended the previous ruling and accepted the Trump administration's request. The Court of Appeals ruled that the decision made by the United States Court of International Trade should be suspended for now. The court said that the suspension will remain in effect until the appeal is reviewed, and during that time the previous ruling will be applied as it is. Is this the correct interpretation? So nothing has been decided yet, and the decision by the Court of Appeals is not about whether it's good or bad, or whether they agree or disagree. Right now, there is a lot of uncertainty regarding the tariffs on Trump, and one of the things that the United States market hates the most is uncertainty. This is exactly that uncertainty. Individuals and companies need to make decisions based on certainty, but right now, they can't do that. So it will take some more time for the tariff issue to be clearly resolved. If this trend continues to strengthen, it seems likely that the division in American politics will deepen even further. As a result, the United States stock market showed a sharp decline. So all 3 major indexes rose slightly and then closed lower, 0.28%. S&P 500 closed up 0.40% and 0.39%. Out of the 19 sectors in the United States, 11 sectors closed higher, while the remaining 8 sectors ended mixed. First, looking at the top gainers, Nvidia rose by 3.25%, making it the best performer. However, the gains in other stocks were not as significant, and even the lagging stocks didn't fall much. There were no stocks that showed particularly sharp declines. At the end, Uber announced that Tesla's robotaxi selection is scheduled for June 12th. In this news, we saw a 4.49% drop, which is quite a sharp decline. So, the ones that were directly affected were Uber and another stock, Nvidia. So today, I'll read you an article related to Nvidia. Let me explain in detail what kind of investment value NVIDIA has from a personal perspective, and what thoughts people currently have about NVIDIA in the current situation. Alright, first of all, in this earnings report, a lot of information was provided, and through this update, let's try to organize how NVIDIA's outlook has changed compared to before by going through this article. NVIDIA has shown impressive growth even while dealing with the sluggishness in certain business sectors. So what are the major business sectors that are experiencing losses? Right after they lost the Chinese market, they suffered a loss of $4.5 billion. Even so, they didn't give up and actually improved. This is the part I want to emphasize. Sales for the fourth quarter reached $44.1 billion, up 69% compared to the same period last year, far exceeding expectations. Mainly thanks to the boom in artificial intelligence, NVIDIA's data center business saw even greater growth, increasing by 73% compared to last year to $39.1 billion. So the results were just too good. By the way, NVIDIA's guidance was a bit disappointing. So what does NVIDIA think about the current quarter, which ends in July? They gave a midpoint guidance of $45 billion in sales, but the issue is that analysts' consensus is $45.9 billion. So they presented a rather conservative guidance that doesn't quite meet market expectations. This can be interpreted as a negative. But the stock price actually went up. The main reason is that in recent weeks, there were concerns that things could be much worse in some parts of the supply chain. And what about Nvidia? To be more specific, in the April and July quarters combined, they recorded a total sales impact of $10.5 billion, which actually exceeded expectations. This part was actually handled very well. That's because these are investors. If it wasn't for the impact of H20, NVIDIA would have shown a fairly significant guidance improvement compared to consensus. The fact that they recognized and disclosed this part quickly is important, and that's why I'm explaining it to you like this. So let me explain. If you look here, the previous guidance was $45 billion, but the market expected $45.9 billion. However, due to the H20 issue, there was a loss of about $6 billion. So if there hadn't been this loss, NVIDIA could have actually reached $51 billion. This is how you can simply calculate it. Now, this suggests that there is stronger growth than expected in sectors outside of China. Now, China is still sluggish. Originally, sales in China accounted for more than 15%, but now the Chinese market has shrunk like this. But the important thing is, even without China, the growth trend is strong enough to maintain this level of growth. In fact, the growth outside of China is even better than expected. Here's some good news for NVIDIA investors. The market is looking ahead to the future. China-related performance has generally been a risk factor, but now we know exactly how much sales are declining in China. And with that in mind, NVIDIA's guidance and the signals they're sending, as well as the recent upward revision of their outlook, all reflect this situation. NVIDIA's chief executive officer is Jensen Huang. Jensen Huang repeatedly emphasized that artificial intelligence is a technology that will transform every industry, and that we are still in the very early stages of this technological revolution. I also continued to repeat this part to many people. Artificial intelligence's influence is still just beginning, so focusing on artificial intelligence-related portfolios is extremely important. This is the main strategy of many major portfolios. Now, the first reason for this kind of investment strategy is that the profits of the biggest tech companies continue to grow. Let's take a look at some recent actual performance figures. Recently, there were concerns that the tech industry might lower its earnings forecast for artificial intelligence infrastructure due to economic uncertainty in some parts of the world. This kind of worry existed. Until now, companies like Meta, Amazon, Microsoft, and Google have been pouring huge amounts of capital into artificial intelligence infrastructure. Now, people started to think that the peak has passed and that these companies won't spend as much money as before. There were a lot of people who thought this way, but in reality, the situation turned out to be the opposite. Meta announced that it would invest even more in artificial intelligence, and Nvidia said it was still pouring investments into the latest technology. Microsoft also said that the supply contracts for artificial intelligence services were much bigger than expected and made similar remarks. When they say supply is tight, it means that supply can't keep up with demand. Let me explain this once again. It means that strong demand cannot be met due to a lack of supply capacity. However, Nvidia's management addressed this issue by providing a very positive message this time, alleviating concerns about various supply bottlenecks. The top financial analyst, Coles Kress, came out. Nvidia's flagship graphics processing unit production is increasing, that's what he said. Major cloud computing companies are currently deploying thousands of the latest high-end GB200 miles, VL72 server racks, that's what he said. That's nearly 1,000 units every week, which means about 4,000 to 5,000 units a month. So this means that a very good supply is currently coming into the market, as you can see. The price of each unit is in the tens of millions of won. So it means that they are preparing for the opening of Cheon and are selling and attracting orders worth tens of millions of dollars. That's how you should see it. Is it a cluster? Even Microsoft alone is expected to purchase hundreds of thousands of gigabytes. 200s. Recently, I saw that Microsoft was starting to make some moves, but even so, Microsoft is expected to buy hundreds of thousands more units. That's surprising news. Now, what's even more important is this. Nvidia's next-generation artificial intelligence server, the Blackwell Ultra, is reportedly progressing as scheduled. Crest announced the test shipment of the Blackwell Ultra GB300 miles VL72 artificial intelligence server to some customers in May, and it is expected that mass shipments will begin during this period. Therefore, Nvidia's technological capabilities continue to improve, allowing customers to use even better products in the future. If this happens, prices will go up, and Nvidia will be able to maintain an incredible margin. That's how you should look at it. When I was on the air the other day, I mentioned that Nvidia's gross margin, which is called gross margin, has increased a lot. I explained this part to several people. Looking at the results from the last quarter, it went up to 60%. Then, for the next quarter, they said it could go up to 70%, and by the end of this year, it could even reach 75%. That's how the outlook was presented, but it's not just a simple outlook like that. It's because the high-end Ultra GB300 VL72 artificial intelligence server is about to start being delivered. That's why you see these numbers. That's the result in the end. After confirming this earnings result, Wall Street is becoming more and more optimistic about NVIDIA's future. First, let's look at Morgan Stanley's analyst. According to the report, the Chinese-related sales and other business sectors have slowed down. Only China isn't doing well, but the rest is doing really well. That's what they're saying. From now on, everything will get even better. That's the expectation. Now, in that, Jensen Huang, the chief executive officer, made a lot of very important remarks. He mentioned several driving forces behind the rise of artificial intelligence and the forces behind its growth. The first was computing power. The second was the advent of the internet. And the third was the emergence of generative artificial intelligence. What is the latest artificial intelligence model? By performing many calculations and operations to obtain more accurate answers, it is equipped with the ability to respond more naturally to queries. The queries here refer to both the questions we asked out of curiosity and the problems we were trying to solve, as well as the tasks we were trying to accomplish. John Xion-Huan is the inventor. Compared to previous artificial intelligence models, it consumes more than 100 times the computing resources, and that's how it was developed. In the past, answers came out right away from already stored data that was already known. If you don't use Gemini, you can try using other PTs. It saves time. That's because the time it takes to process the data has increased. Recently, artificial intelligence models have been generating various ideas, making suggestions, and then providing solutions. This is how they work these days. That's why. Compared to before, we now use more than 100 times the computing resources, which allows us to produce these kinds of results. The latest artificial intelligence models have achieved remarkable performance in generating ideas, but this has come at a significant cost. That's how things have changed. Because the performance is so good, it's being used a lot. For example, in artificial intelligence models, it's the process of generating answers. So let's check it one more time. Next, as the order progressed, artificial intelligence agents began to be implemented, and that's what happened. The agent here with me, to put it simply, is an agent that does things for us in our daily lives. For example, when you are looking for a house, if you ask a real estate agent to find a good house for you, they look for a good house on your behalf and let you know. So, is artificial intelligence an agent like this? By simply receiving simple instructions, it can automate repetitive business and personal tasks, complete frequently used computing tasks, and do things for you. That's how you can look at it. That's right, the agent artificial intelligence is the one that handles tasks for you, just like I explained. This technology has already been actively adopted and successfully implemented in the industry. And finally, there's also sovereign artificial intelligence. Sovereign artificial intelligence refers to artificial intelligence that is operated and managed by a nation. Nvidia is a company we're all familiar with, and recently they announced a large-scale partnership with Saudi Arabia and Abu Dhabi. Saudi Arabia is currently building its first artificial intelligence data center, and over the next 5 years, they plan to purchase about 18,000 Nvidia GPUs for this project. And the same goes for the contract with Abu Dhabi. Next year, the first artificial intelligence cluster will be activated. This is how we can make predictions. Now, the important thing is this. This is just the beginning. Up until now, the Middle East has been making headlines, and even with just that, it's been huge news. But the Middle East is just getting started. Now, many countries around the world are leading the way, and the artificial intelligence that countries are taking the initiative on is likely to come as a huge trend. This is the part we can look forward to. Is it really John Soon-Hwak? This time, there are many different contracts that were not announced at the conference call. It was mentioned that they would visit Europe next week and announce some of them there. So, last week there was a lot of big news coming out of the Middle East, and next week we can look forward to some good news from Europe. For your reference, Nvidia's stock price has risen by about 40% since the beginning of April. But still, despite that, it only went up by 4% compared to the previous week. However, the stock price had dropped a lot before that and then rebounded, so that's how you should look at it. So even after the recent rally, the stock price hasn't recovered yet. If you look at the expected sales growth over the next 12 months, it's about 45%, and the forward price to earnings ratio, which is the price to earnings ratio based on expected earnings, is currently less than 29 times. Here, the sales growth rate is 45%, but the forward price to earnings ratio is only 29. So if you divide 29 by 45, the price earnings to growth is much lower than 1 now. Let's compare this with other industries. Here, Apple comes up. In the case of Apple, the price-to-earnings ratio is 28, which is similar to Nvidia, but the sales growth rate is less than 4%. So, if you divide 28 by 4, it's 7. That's why the price-earnings to growth is 7. 0. So right now, compared to Apple, Nvidia is extremely undervalued. For example, in the case of Apple, it's more than 7 times more expensive than Nvidia. This is how we can do the calculation. Now, at the end of the article, there's a very important sentence. If you look at it objectively, Nvidia is closer to the growth story of the PC revolution, the beginning of the internet, and the birth of the iPhone, which each brought about a new era. Even if you look at the market cap, even if you look at the growth rate, it's getting closer to the early days of the internet boom, or even the early days of the iPhone. And if you think about the process, the emergence of such innovative technologies usually lasts for more than 10 years. If we had invested in the iPhone, we could have seen tremendous growth within 10 years. Previously, when Intel was leading the PC revolution, those who invested in Intel at that time also enjoyed about 10 years of strong growth in the stock price. On the other hand, in the case of Nvidia, it's only been about 2 years since the boom started. The fact is, it's only been about 2 years since artificial intelligence actually started to become popular, which was in 2022. In November, Chat Generative Pre-trained Transformer was released, and it's only been 2 years since then that the artificial intelligence revolution really began. So even now, Nvidia is just getting started. How is this kind of growth possible? Through Mijin Hanmadi, I will try to convey my personal opinions as honestly as possible. According to Nvidia's latest earnings report, the current enthusiasm among artificial intelligence investors is justified by the company's outstanding performance. I want to leave you with these words. Now, this is the current situation. Recently, we saw this in Microsoft's announcement and Google's actual report as well. We can clearly see that the usage of high-performance artificial intelligence model APIs is rapidly increasing. If you ask what an application programming interface is, it's a bridge that connects different functions. Here, there's artificial intelligence, and then there's a software program that uses artificial intelligence. The thing that connects these two is called an application programming interface. To put it simply, a lot of companies, industries, and people are using artificial intelligence capabilities in their own software programs or services. That's how you can look at it. Just a few months ago, it wasn't possible to use it like this, because there were a lot of errors, a lot of incorrect information, and it just didn't work properly. But now it's become so much more useful, and there are so many things you can do with it. So now you can see that artificial intelligence has become something you can really use, and that's how it is. Now, to help everyone understand easily, let me give you the most common example. In the past, in cases like this, even just a few months ago, we had to painstakingly prepare presentations, PTs, and only receive simple questions and answers from tools like Gemini. But recently, as you can see, many people are using various artificial intelligence software, and I myself am currently using about 6 or 7 different artificial intelligence software programs. So for example, there are artificial intelligence news anchors, American stock market videos, and artificial intelligence podcasts. Various types of content like this are being created. Honestly, up until recently, I felt that creativity was a bit more important. But since we're just starting out, in a few months, even content that I deliver directly with my own voice will be hard to distinguish in terms of quality. The possibility that it will improve dramatically is high, and this is something we can look forward to. So all these tasks are using artificial intelligence recommendation features. But to be honest, it's not just that. I'm just an example myself. There are an incredible number of companies and people in the world who have started using artificial intelligence recommendation features. We can read this trend. We can see that the effectiveness of recommendations is increasing quantitatively and that their value is growing. And in the meantime, Nvidia has newly released the Blackwell architecture-based NVR72 system, right? Compared to previous generations, it provides overwhelming recommendation processing performance. This means that the gap has widened tremendously. The recommendation model now generates tokens, and the ability to connect to memory as needed has increased. Here, token generation refers to the process of creating tokens. How much faster can artificial intelligence speak, write, and work? This is what determines its competitiveness. For reference, in the past, even in the previous generation, with GPT-3, many people were amazed by how many words it could generate per second. By the way, it is said to offer performance that is 40 times improved in terms of data output speed and processing capacity. So, with a 40-fold increase like this, after Blackwell and others were introduced, the number of artificial intelligence outputs has increased dramatically, and you can see it like this. Now, in the end, it's Nvidia's more advanced artificial intelligence, a high-performance output model, because it needs to produce better results at a much faster speed than before. It's a service or industry that uses Nvidia GPUs, and it means that in the future, they will be able to create more value and make more money. So the more people and companies use Nvidia GPUs, the more we can expect this to happen. Now, this is how the supply is structured. Also, this time there is a supplier, and the supply side is very clear. Blackwell architecture is a fundamental breakthrough, and we can expect it to strongly drive Nvidia's next actual growth. Going forward, with better performance and lower prices, Blackwell can continue to grow its market share. That's why in the second half of the year, it's expected to be even stronger than the first half. This is why expectations are high. So in turn, Wall Street analysts are also very positive about Blackwell's potential to significantly expand its influence in the Chinese market. Nvidia has the potential to maintain its industry dominance for up to 6 more years, and that's why its current upward momentum is expected to continue. So for these various reasons, this is why the market is reacting this way right now. The recent surge in the United States stock market is once again being confirmed by many as being led by Nvidia. The next prepared content is about the United States tech stocks that I mentioned earlier, and today's main focus is on Meta. Many of you may already know this, but as I explained in detail earlier about Nvidia, Meta is also showing growth momentum thanks to artificial intelligence. Do you think it's too late for us to get into artificial intelligence now? Besides, Nvidia, Meta is also a company that has consistently attracted attention and is considered a promising company with the potential to grow further. Now, through this podcast, let's find out how artificial intelligence and Meta are related and whether Meta can achieve further growth through artificial intelligence. I hope you listen to this explanation carefully and find it easy and interesting. Earlier, I briefly mentioned it, but this time, please listen to the podcast. Podcast is a new type of content, and I'm curious how many of you are satisfied with it. If you could leave your feedback in the comments, that would be great. By the way, do you all listen to podcasts separately? From now on, the podcast will be created and shared exclusively for paid all-in-one members. Currently, on YouTube broadcasts, we are planning to continue developing various types of content that many of you enjoy. Well, that's it for today's broadcast. Once again, I would like to sincerely thank everyone who participated in this week's investment together with Mi Jung. In June, I will come back to greet you again with various contents that can help many of you with your investment activities, as well as with new types of content. Let's keep fighting together until the day we all retire through investing in United States stocks. Please be happy, thank you.
Hello Mission family members. Today the materials we will look at together are Meta. After the recent actual presentation, let's take a look at Meta's artificial intelligence strategy, what kind of influence it has on the market, and what we should keep in mind going forward. They say advertising prices are going up, but is this really all because of artificial intelligence? Yes.
Hello. There's an analysis that Meta's artificial intelligence investment is definitely having a positive impact on its earnings. In particular, it's quite impressive that advertising revenue increased by 10% compared to last year.
Wow, 10%?
Yes, but at the same time, there are clear explanations about related services, investment, CapEx issues, and even the process of realty apps and losses. So today, by looking at these two aspects together, I aim to clearly explain to everyone the current situation of Meta and its future potential.
That's great. Then let's start with some good news first. You just mentioned that the advertising unit price increased by 10%, but the number of ad impressions only went up by 5%. What's even more interesting is that the unit price increased more than the number of impressions. Right away!
That's the key point. It's not just about showing a lot of simple ads, but now artificial intelligence-based ad tools are actually delivering results. Advertisers are now able to see that they're getting better value for their money.
Because the effectiveness is good?
So, while the number of exposures itself may be limited, if the advertising effectiveness is good, the unit price can continue to rise. Recently, Meta has also introduced independent artificial intelligence website features, which can ultimately be interpreted as a new revenue channel they're trying to create.
They may not even be able to do user-based targeting. According to what I saw, the number of daily active users is 34 million, yes.
Oh my, the number of users.
I heard it's about 3.4 billion people, yes?
That's right. This is the most powerful weapon of the Meta, the effect of the network that connects people.
Network effect, yes.
The more users there are, the more the value of the service continues to rise. In fact, Meta has an artificial intelligence model called Llama. Yes, Llama. Technically, you could say it's the world's best, but that's not necessarily the case. In some evaluations, it actually ranked lower than the Alpaca model. Right, yes, but I think Meta is taking a completely different approach here. Rather than focusing on having the best technology or competing for the top spot, they're concentrating more on making artificial intelligence easily accessible to a wide range of users and developers.
They're putting more emphasis on user experience.
That's right. In other words, rather than focusing on technology, they're capturing the market by prioritizing a user-centered approach, which can be a winning strategy.
There's a reason for that. But the part that's being emphasized is also clear. So, Seolbi Tuja, are you saying it will increase to as much as 720 trillion won by 2025?
Yes, that's right.
It's not just about spending a lot of money, but there's a reason for this concern. In reality, it's called free cash flow, or free cash flow in financial terms. That was actually lower than the same period last year, yes.
That's correct. The problem is that the returns from such large-scale facility investments are coming back as much less revenue than expected. Warren Buffett also always says that a business that requires less facility investment is a good business. Yes?
That's right.
Here, there's also the reality maps, virtual reality, and augmented reality business sectors. Here, they've been losing about $15 billion a year, and they've already lost nearly 20 trillion won of our money. That's also continuing, and
$15 billion? Even though companies like Ray-Ban Smart Glass have succeeded, it still seems like there aren't any clear business models for artificial intelligence investments yet.
that's right. The monetization roadmap for Reality Labs is still quite uncertain, just like before.
Then what about the stock price? It went up a lot recently, but do you think the valuation can go any higher? But
The stock price has recently been adjusted, but based on the expected net profit in 2026 and the current earnings per share standard, it is being traded at about 23 times earnings, so that's how I would interpret it.
is 23 times considered high, or is it considered reasonable?
If you look at it from a historical valuation perspective, or if you consider Meta's growth potential, especially its additional revenue potential, through artificial intelligence, then 23 times earnings is a reasonable level. So, I would say this valuation is not excessive. That's right. Also, if you look at it by segment, the advertising revenue from Instagram Reels is growing rapidly, and this is also a positive factor for the stock price.
Are they continuing to buy back their own shares?
Yes, and when you look at times of economic uncertainty like the current situation, Apple tends to stand out compared to other big tech companies in terms of how well their stock price holds up.
That's right. Now, let's go over today's meta-analysis one more time. First of all, their ability to monetize using artificial intelligence and their huge user base, these seem to be undeniable strengths.
But at the same time,
As you said, the high server costs and the uncertainty of real-world revenue, these seem like issues that need to be addressed continuously. If you, Mijon, and the panelists could share your thoughts on this, that would be great. Yes.
that's right. Lastly, if I could ask everyone one more question, I wonder what you would say. Looking at the current trend, rather than developing the world's most advanced artificial intelligence models, it seems that companies are focusing more on integrating existing platforms' artificial intelligence to enhance user experience.
This...
Can we figure out what this means from an artificial intelligence business perspective? Will it be the company with the best underlying technology that dominates the market? Or will it be the company that can attract the most users and build loyalty? In the end, which one will win? I think it would also be interesting to hear each person's perspective on this question.